Welcome to the Dividend Podcast, episode number 20. Quarter 3 earnings from Microsoft, Hasbro, Novartis, and many more. Hey guys, welcome back to another episode of Dividend Talk. I'm your co-host, Engineer My Freedom, and today I'm joined with European DGI. This is a podcast where we discuss our passion for dividend growth investing with our own unique European flavour. If you're new to this channel, please hit the like button and subscribe to us, and check us out on YouTube and Spotify. See you on the inside. Episode 20 already. How do we get this far?
Consistency, EMF, consistency. Every Friday, in this case Thursday, but every time consistency, and that's how we get here.
I know usually we talk about the news of the week at this stage, but honestly, I couldn't bring myself to read the news. I've opened up a few articles and it's full of COVID and elections, and I just had one of those weeks where I just did not want to read anything. So all I did is watch football for the week. So that's my news, just football, plenty of Champions Leagues. Man United are winning. I don't like that. Liverpool are winning, but we have no centre halves, so I don't know how we're going. I don't know how we're going to fare. Actually, I think we should just cancel the season. COVID is after taking over, just cancel it or suspend it. But no, I have no news. As I said, I couldn't bear reading about COVID anymore or reading about this election. So I'll leave that till next week when popcorn time actually happens.
Good. So I will not bring up the lockdowns in Europe, in France, and what it means for the French people there. I think, wow. But okay, so let's talk then the real news in these, of course. And I like watching Barcelona, and they lost with 3-1 from Real Madrid. I thought it was a bit, it didn't reflect really the game. But then Barca won in the Champions League with 2-0 from Juventus. And what I just wanted to, what really my news in here is this guy Alvaro Morata. He scored 3 goals from an offside position. Come on, talking about having a bad day.
I didn't watch the game. I didn't see that game, so I don't know. But 3 goals from an offside position. How does that happen with VAR involved? I mean,
well, you just stand offside, and then people complain, and the referee goes to check with the video referee, and then they say, "Oh, you were offside." So,
I mean, VAR is just ruining the game for me, really. But
yeah,
that's incredible. 3 goals offside.
I've never seen that like that. Never.
No.
So this is those growth stocks with technology and such. They're screwing our fun.
I mean, I thought VAR was brought in to take away the talking points, and now all we're doing is talking about VAR making these decisions. I prefer the old way. We have a good fun debate. That was offside. It wasn't offside, but who knows? But now it's just, I don't know. Like, it's ruining all the fun. It's ruining all my fun anyway.
Yeah, they in general they say the older we get, the more conservative we get. So
I'm still young at heart. So we'll move on to our main topic. We have a load of companies here that we can get through. So I'll maybe start. We'll start with Hasbro.
Yeah.
So I looked at these on Tuesday night, and I was quite surprised actually with how they did. The growth in ties and games was up 9%. I suppose that with COVID and people being locked down, you can kind of imagine people buying more games. But this was offset then by a huge decline in the entertainment section, which was down 29%. The consumer demand remained strong. So you could see that then with the revenue in the US, which is probably their main segment, which was up, I think up 95%, and the operating profit was up 36%. So good strong numbers from the US. They are struggling with this entertainment, and I know they made an acquisition of E1 TV, which has impacted the revenues and kind of offset anything. And what kind of struck me is that they have lower advertising revenue from YouTube. So I'm kind of wondering how much they make from the YouTube platform. It must be quite substantial. Um, and then they had lower revenue from entertainment and licensing compared to 2019. But overall, it was a decent earnings from them. I mean, it was good to see him back. I don't hold any positions in him. I mean, I'm not. I know Ian Lopes loves him and has huge position. I'm kind of I still think they're overvalued, and I'm waiting on a time to get in. But what I did like actually was in their presentation to give this key cash flow and balance data sheet, and they give a list of everything down. They say cash, long term debt, and they give a note then beside it explaining what it is and where it's gone. So, yeah, no, it's good.
So I've been studying Hasbro several times, also Mattel, and I think Hasbro is really excellent in its execution compared to a company like Mattel. And if you then think about what this industry had to go through the last few years, in like you said, online shopping and everything, and the malls closing, Toys R Us and such, I think Hasbro has been excellent because it transformed really to a digital space with their brands together. Also, I think if I remember correctly, in collaboration with Disney and such. So I think this company has been only doing the right things while the industry itself is only having headwinds. So for me, it's really a quality company. I understand why Ian Lopes is really a fan of it. I've been several times looking at it. Every time I passed on, and every time I had regrets that I didn't pull the trigger at the time.
And what's your thoughts then on E1, that acquisition? Do you feel that's a good fit for them?
I honestly cannot really judge, but what I can tell is that I have faith in the CEO because he has a good track record of making the right decisions lately. So I give him really the benefit of the doubt there.
Okay, good. So we move on if you want to have a little chat about Microsoft for a moment.
Yeah, well, I mean, I think I'm becoming a Microsoft fanboy. And this was just killing, you know. I have hardly no words for it. I mean, have you seen their revenue figures? It's just amazing. 37 billion from a 12% growth just in pure revenue compared to last year. It's amazing. And then if you look at the underlying numbers where the growth came from, it came from everywhere, all over the place. And usually in a well-diversified company, you have like one or two pulling it, right? Segments. But here, every segment is pulling it except search, Bing. Nobody likes Bing, we know that. But everything, Xbox, the intelligent cloud, LinkedIn, yeah. And I was surprised because I would have thought, like with so many jobless people, that companies have less I would say money for LinkedIn subscriptions and everything. No, up 16% up, and this was summertime. Yeah, remember that as well. I believe that in Q2 they had, I think, actually a little bit more earnings than in Q3 because there's a little bit of seasonability in there. But I'm almost speechless with what this company is doing. I mean, remember, this is the Microsoft that was buying Nokia in the time. Satya Nadella comes in. I mean, I've probably mentioned it before on the podcast. I read this book, Hit Refresh, and this was really, really a nice book because in the midst of the transformation that he was doing, he wrote a book about how he's thinking in the midst of the transformation, not knowing yet what the outcome will be, and these signals were not there yet that it would be so successful at the time. And I'm just, I mean, I'm just in love with the CEO, I could say, and these numbers are really, really, really strong, and they're firing all cylinders. I don't know where it stops. And if I look now at intelligent cloud business, it is now the largest segment. It grew from where was it? I think from 12 to 12 billion or something like that from top of my head. It is now, it's just the largest segment. So And Azure had also, I think, a 48% growth,
Yeah.
So what it tells me is that now intelligent cloud becomes the main driver. It's the fastest growing segment. So I can only see kind of exponentiality now in the revenue and profit growth. So wow, I did not long ago an analysis on Microsoft, and I think there's not much that can stop this company at the moment. It's all over the place. I mean, yeah, for me, just wow. When I saw Microsoft coming in and I looked into the numbers, wow. And you have never heard me saying this. I'm usually really skeptical and critical, but with this company, I'm blown away. They have all
Yeah.
the headwinds.
Yeah, as you said, it's some impressive numbers. They have revenue up 12%, earnings up 32%, LinkedIn, as you said, up 16%, Xbox increased to 30%. I'm kind of wondering if that'll take a hit next quarter with PlayStation 5 coming out and stuff. But I mean, just big numbers. And I mentioned to you before and off screen that I've had an order in them for 185, and I don't think it's ever going to get there. I think it's just going up and up and up. And I mean, just a quality company and the kind of companies that we want to get involved in. We know cloud and the internet is the future. So Microsoft have a big part in 10, 15 years from now. Microsoft will still be one of the number one companies, I think, in the space. That
Yeah.
just a good company.
1.5 trillion market cap. Remember that. These numbers. And I know Amazon, similar kind of story, but you can count them really on one hand, these kinds of companies. Because these are companies at scale. These are not like the small companies going from, I don't know, 100 million to 120 million. These are 1.5 trillion company. Yeah, blown away. I can't think normal anymore with this company, as you hear.
It's nearly buy blindly at this stage, isn't it? Just keep adding them, just
Yeah.
keep adding them to the portfolio. But we'll move on. We'll move on to one that I haven't got as much time as I wanted on this one, which is Royal Dutch Shell. I think everybody who listens to this and probably reads my blog or on Twitter knows that I am a fan. I don't have the pain you have. I didn't buy extremely high. I got in when they're, I believe, close to rock bottom. So for me, it was a really good sign and good quarter from them. So looking at Royal Dutch Shell, I suppose I was quite surprised with them announcing that they were increasing their dividend. I wasn't expecting it. I think I was expecting them to keep it flat for maybe a year or two, especially with the unpredictability of oil and how depressed and we're going back into a recession again. We know that this is a gas company, not an oil company, as you know. But I was quite impressed that they've actually went out and reset the dividend. Look, they caught it, but now they are focusing on actually increasing that again. And they've said that as well. That's their number one priority, increasing dividend and giving back to their shareholders. The second priority, I think, is reducing their debt, and they've started to reduce this again in this quarter. And I believe that they're trying to get it down to 65 billion over next year, which gives them a AA rating as well. So, I mean, they're going in the right direction. To look at some of the numbers that they had, they generated 9 billion in cash flow. 7.6 billion of that was free cash flow. So 6.7 billion was organic, and then 0.9 billion was due to divestments. Their adjusted earnings was 1 billion, and then their net debt then stands currently at 73.5 billion. So, I mean, as I said, I kind of briefly looked at them before we came on air. On Twitter, on our Twitter group, they posted that this morning, increase in earnings, or dividends. So I'm quite excited to read into it later when I have a little bit more time. A little bit rushed after work. I came home, I was eating my dinner, trying to catch up with them. I'm going to dig a little bit deeper in. I'm not quite sure where all our money is coming from. I haven't looked into the segments, but look, it's encouraging. It's encouraging for me. Kind of helps my thesis a little bit when I decided to buy. I know I got a lot of pushback and a lot of people saying, "Oh, why are you buying Shell now? Why are you buying oil companies now?" But it's good to see that they are starting, kind of reset themselves and they're starting to grow again. So another couple of quarters like this, and I'll sure I'll be a happy shareholder.
I think you did a good job in buying the dip. So for me, this was a promising quarter to see this from Shell, and I think they will still get 1 or 2 tough quarters ahead with all these lockdowns. So it still has some downside, of course. But I think there's even an expression in the Netherlands where they say it can freeze and it can melt. So so in general, I think there's, at least with the dividend yield, there's a safety net again a bit to the share price, and that fell away from it when the dividend cut was there. So
Yeah, look, I think they did the right thing at the time by cutting that dividend. If they had kept it and it was the same, they'd be struggling right now. I
yeah,
believe so. Look, it was a good decision. It was a good decision for the company, for shareholders like me getting in. I still got a good starting yield. I'm getting them at over 4%. So
hmm
it's not as if it was a terrible deal for me either.
yeah,
If I was sitting in maybe your shoes or someone else who was bought them a lot higher and going through that pain, I might feel a little bit differently now. But I mean, I think I got in. I was lucky. I got in at the right time. The downside is a lot lower than the upside for me, anyway.
yeah. Okay. Cool. Story continues around Shell, and I think we'll touch upon it multiple times too in the upcoming times. So let's go then to the next company. I wanted to call out Sanofi. Um, they reported earnings today, and actually, I was quite. These are decent and good numbers. So what's probably good to know for people is that they had quite some sales or decent sales growth at least, and mainly due to one of the top products, which is called Jupiceret. That's always an issue with these Latin names. But this is a product that really helps against eczema, not based on steroids, but rather addresses the inflammation from the inside, let's say. So it has a really good value proposition to people with with these symptoms. And also their flu vaccines really offset some of the other sales. So generally, it was for me a good quarter because it's for healthcare companies quite tricky at the moment. For instance, you can't really in certain areas have good access to patients if hospitals are closed and such, or not treating patients. So, and then a company like Sanofi just shows that they have a good diversification, because what I did notice in my environment, everyone wanted to quickly get a flu shot. So I wanted to go for a flu shot, and they were not available anymore because the general narrative is like you don't want to get the flu, and then on top of that, COVID-19. Yeah, it's like a double whammy. So, and I think this is what Sanofi just benefits from at this moment in time, and gives them having good numbers. So, what is probably good to know is that if you then look at their earnings and such, they look a little bit flattish. But we need to remember that most of the European companies have a currency headwind of almost 7 to 8% at the moment if they have a lot of international sales, and you see this with all these companies. So the underlying earnings were very strong with Sanofi. And what also impressed me, and I saw the news over the quarter already, but they had 7 new phase 3 programs in the cancer space and such, oncology. And for me, it just means that this company is doing pretty well with its, how I say it, with its pipeline. And you get the company at a 4% yield and a PE of just below 10. For me, this is really, really, really attractive. So I would really recommend, if people want to have a value play, to dive a little bit further into Sanofi, also as a dividend stock. And they just upgraded their guidance as a board of directors, so they also feel confident about what's there to come. So this might be one of those hidden gems after you're doing your own homework, that might actually where you could just maybe already get a lot of price appreciation just from multiple expansion if you're into price appreciation.
Yeah, cool. They're a company that I'm familiar with what they do. I mean, if you look out my window behind me, you'll see their factory, big bright lights. It's close to home, so um, I'll definitely look into them from a dividend point of view. I remember looking at them before, and their yield was pretty low, and it kind of turned me off at that time. But we might revisit them soon and see. They're in the Noble 30, are they?
Yeah.
Yeah, yeah. So yeah, no, I'll definitely revisit them over the next couple of weeks. So I'll move on to Novartis AG. They had an okay earnings. I suppose I mentioned to you before that I drive past their factory every day, and I didn't even know. So I drive past twice a day, and I didn't know that they were that close by to me. But looking at their figures, I mean, their sales were up from quarter 3 in 2019, 1%, which is quite good, and their operating income was up as well. Their free cash flow was down 32%, and they have this down then to legal settlements, which comes from I think there was 642 million settlement to the United States Department of Justice, if I believe.
Yeah.
And then they have other issues then with our paying patients and all sorts. So look, I had a big impact on their free cash flow, but it was a solid. I mean, I don't think it was outstanding. It didn't jump out at me, but it wasn't disappointing either. It was solid. You notice their earnings have gone up, I think 1.52 compared to 141. And what else had they there? They had 11% core operating income. So I mean, look, solid overall. And yeah, I'm quite happy with them.
Yeah. I like Novartis as an investment, and I would love to add more. Pretty decent quarter, like you said, nothing exciting,
No,
but
nothing
pretty
exciting. No.
decent.
What kind of stuck out to me was that they were quite aggressive in buying shares. They repurchased 14.7 million shares. So I was expecting their share count to go down, and then it actually went up. They had 25.8 million shares then from for an equity value were delivered as a result of options exercised by participation plans. So I've never seen that before. It was quite interesting. I was reading it, and when I seen 14.7, I went off to check the share count, and I was like, how did that go up? But it's quite interesting.
With some companies, I often do this in analysis. I check if, for instance, they are buying back shares. I also look at the share count, and there are companies that actually are mainly doing buybacks to prevent the share count to increase instead of expensing the options. Yeah, because you can also put it via the P&L, via the profit and loss statement. But it's, I guess, easier for them to just dilute the shares and then buy back with debt in some cases even. Yeah, I find it a bit dubious. I prefer them to expense it. There are always many debates about that. What's the best one? What's to do? But I prefer people to just be using a moral compass in these kinds of decisions and not necessarily only an accounting kind of approach.
Yeah.
Hey, then fresh from the press, I would say Apple earnings just came in. So I can't go in really in depth in it, but there are a few things that really stood out for me. So their net income slightly declined, while sales was slightly up. What I can say is that their product sales were down, but then services sales were up. So it kind of outweighed the product decline. So it just shows that their services business is really really doing well. It's still, of course, just a fraction, a decent fraction, let's say, compared to their hardware sales. But that is in general good. But then if I then look at what really stood out for me is that their earnings per share were flat, or actually like even 1 or 2 cents decline, so from 76 cents to 74 cents, at a net income that was much more lower, like what is it? Let's say 8% lower. And this is just where I said financial engineering comes in, because they also reduced their share count with 900 million year over year. Yeah, so what it just tells me is that they have been buying back shares a lot, and that's actually also the nice thing from buying back shares, right? If you're not earning your money via real growth, then at least you protect it a bit. But then, if you then go better into the figures, what I saw is that they were pulling away. They took 10 billion out of cash. They took also they also played a bit with their accounts receivable or working capital. Let's say it like that. But what I then also saw is that their long-term debt increased again. Their non-current liabilities increased. So let's say cash lower, debt higher. And then there was a really interesting statistics when these are back of the napkin, right? So accounting wise, you might get slapped in the face with what I'm doing here, but just for myself to put some common sense in it. Net income over the last 12 months was 57.4 billion. And if I really read it right, then they bought back 72 billion in stock.
Wow. Wow. I was just reading your notes just as you said it, and you might see my eyes lit up. It's like 72 billion. Just think about that. Like, 72 billion back in stock. That's incredible. That's incredible.
Yeah, it's probably the whole net worth of Warren Buffett in 1 year.
I mean, if they could accidentally put 1% of that into my bank account, I'd really appreciate it.
Yes.
I mean, that's a significant amount of money in buying back your own shares, isn't it? It's ridiculous. But hey, I mean, if you're an Apple shareholder, as you said, if you're not seeing real growth, then they're helping you along this way.
I'm an Apple shareholder, and if I remember correctly, last time I checked at my brokerage account, I saw them 300% up for the year. I don't understand why. I mean, I'm happy to have them. I just don't understand why they have a forward PE of 29 with these kinds of earnings as well. So what I've seen, right? I bought them like 4 years ago or something like that, around 135. When I was looking at the numbers, the majority of the times it was for me just pure multiple expansion. I remember that they were saying iPhone is dead. That was around the time that I bought this, and I've seen mainly multiple expansion in this stock, counting a lot on the services growth. But then when I look at services growth, there's still a fraction. Let's say what is it of total earnings? Maybe 25% or total sales 25%. Of course, higher margin, right? Let's not forget it. There's a much better margin, but I don't see it that strong translated in the bottom line compared to how I've seen the multiple seeing expanding. So it's too much for me. So I for me it is like what some investors always say: you own Apple, you don't trade it, and I'm fully with it. Apple is a quality company. The brand is magnificent. I can't see myself ever selling it unless loses its mojo. But I find it really overvalued, and curious to see what the stock price will do tomorrow here.
Okay, we've a couple more to go through. The next one I think on the list is Chubb. I haven't looked at it at all, so maybe you might give your perspective on.
Yeah, so I did the other time Munich Re, right? The insurance
Yeah.
company here, Chubb, a Swiss one, also Noble 13 member. I own some shares. I love this company. I would love to have more of it. I'm a bit greedy always, so it's always just a little bit too high for me. But what I was impressed with is that their premiums written were up again with, I think, 5.5% on average. And then if I look at what I noticed there as well is that they were able to increase their rates with 10 to 15% on average. Yeah, and this is where, remember in Munich Re that we were talking about like the psychological effect after a disaster? This is for me what's happening at Chubb now, this year at play. People are willing to pay up more now for an insurance because of all the uncertainty that they just had behind them. So probably they extrapolate that in the future as well. And a company like Chubb does well with that. So for me, strong numbers, good numbers. Again, no wow factor, but just, this is a company. It's like clockwork almost, moving along. Such a nice boring company doing boring insurance work, but nicely growing the dividend over time. That's Chubb.
Very good.
So then I have another one that I quickly want to call out, is SAP for the European community. I wrote a blog post about it as well. I think it's a high quality company, SAP, but it got slaughtered on Monday, and it continued its downfall over the remaining days, and mainly due to lowered guidance from their side. The lowered guidance is not in the same contrast as how the share price dropped, so there's more to it. I wrote an article about it, sharing my view on, everyone either hates or loves SAP, but I know once you're in bed with SAP or married, it's like you're like a rich person and you need to divorce your wife and giving them half of your wealth. That's SAP. So you rather keep investing in it and upgrading, even sometimes if you think like, should I really do this? You keep upgrading in your wife or in SAP. So that's it for me. And hence SAP is there to stay. They're now trying to upgrade their wife by making it a digital wife, by moving people in the cloud, their wife in the cloud. And this is SAP. And sorry, I'm not trying to be female unfriendly here, but for me, it is something like, you're in bed with SAP once you're in there, and there are just not many companies that can support large enterprises with the whole ecosystem and the integration. So I still find it really much overvalued. But if it keeps dropping at this pace, then maybe somewhere in the middle, I try to catch the knife a little bit.
Yeah, I don't have much more to add. Read your post. It's a great read. I'm not in bed with SAP just yet. So maybe I'm just not ready to get married
Commit.
there yet. But,
not to commit.
but your post did intrigue me, and it's as you said, a little bit overvalued maybe, but we'll see how they go over the next few weeks, and they might drop into more of a value play range. But I suppose that's it. There was one other company I wanted to mention, which was AMD. I'm purely interested in this because of my vested interest in Intel. I suppose I wrote my own blog post on that, and then we went through the Intel earnings live when we had dividend day, and we had a few guys on. So AMD was quite interesting, and man, did they smash it out of the park. The revenue grew 56%, and their EPS doubled year over year. So really, really strong numbers. I mean, I'm not surprised. I did think they would do well. I didn't believe they'd do that well, to be honest. But they are just eating it up at the minute. And fair play to anyone who's got in. I'm not a shareholder, but they really, really strong numbers. It's interesting to see now what Intel do from here. They really need to sort out this chip situation. But I mean, looking at scale of markets and the share of market, Intel are still way ahead, but AMD keep growing like this, they'll be catching up pretty soon.
Yeah, it's AMD as well. This CEO, they will write a book about her, about this transformation story. Amazing. Got nothing more to add on that. Great CEO.
Okay, cool. So we'll move on to our listeners' questions then. We don't have as many this week. So we'll start with the first one from Anthony Lopes with a Z. And he asks, what do you both think of the Ant Group IPO? I mean, I'm friends with Anthony. I know him personally, and when I seen that, I wrote straight into a group WhatsApp and said, I haven't a clue. To be honest, I don't know. I know it popped up in one of the groups that I'm in FinTwit or something, and someone was talking about it, and there was big numbers mentioned there. But IPOs are not something I follow. To be honest, I have enough trying to follow dividend stocks without going down them rabbit holes, and they just don't interest me as much. So I don't know. I don't think you have anything more to share on that. So
no. Sorry, Anthony. Next time we'll do our homework better by reading up the IPO list.
I won't. I'm not going to lie. So the next one then came from Centrino, and he asked, what would be the best day to buy dividend stocks at the best prices next week, US election, Monday, Tuesday, or Wednesday? I'm not too sure what this means, to be honest. What's the best day to buy stocks? I don't know if
So
there's
the
a best
election
day.
is on Tuesday. So it's I guess he means like before the election, during the election day, or after.
Okay.
Yeah, or wait even longer. And which sectors should benefit from each winner. So
I
yeah.
I would probably be waiting till after the election. Well, I say that, but I am still buying a couple of shares here and there. But we are going to see some volatility, and depending on who goes in, and you've spoke about the Trump premium, and how long does that take? I mean, I don't believe it's going to fall 10-20% if Trump
Mhm.
gets out straight away. So it may take some time, but it could be the catalyst or the driver to start that decline, as well as
Yeah.
these lockdowns starting to happen. And so I I want to wait. I do want to wait, but I'm finding it hard when I see Microsoft drop down to 204 and stuff like that. So, but which sectors will benefit? I don't know.
So I have a bit of a feeling for it. So if you think in general about Biden, who is pro-climate agreement, Paris, I think we could have some more pressure on oil stocks like Chevron, ExxonMobil, while more the green energy stocks might actually benefit from that, as an example. I don't even know what a president is able to achieve there in a term. It's just the narrative that will change. I also wonder what will happen, for instance, to certain healthcare providers. So I think that's a sector to really be a bit cautious about when Biden comes and what that means. So I think there are a few of those sectors that can really how is it, be impacted by that. A sector that I think will not be impacted at all almost is just the technology sector. Even with the hearings, I think the politicians they cannot agree on a lot. So I don't think either that they will agree on, I don't know, splitting up Facebook or something like that. So I think if you want to have a safe bet, technology. Myself, maybe I'll come later to it with the stock pick where I'll answer part of the answer of Centrino.
And what if Trump stays in? Do you see a drop, or do you think this will continue on?
Well, I don't know the morning after. I think that wow, if Trump stays in, I think I will have some people in my environment that I work with that might really get into mental health issues. Another 4 years, I think that will be more likely this the situation. I think the stock market, honestly, I think will do fine because it means that they can the Wall Street knows they have a president that rather uses the Dow Jones as a yardstick for success. So
Yeah, yeah. 'Cause I noticed you said when Biden comes, and that kind of led me to ask you. Like you obviously believe he's going to win, but I wouldn't rule out Trump just yet.
oh no, yeah, sorry. Maybe unconsciously, I hope that Biden wins. I know this is not about politics, but I'm just a bit tired of all this trash talk that I'm hearing from the White House there. So I can't be bothered about Republicans or Democrats. I just want to hear a person with some decency there, because they are still the world empire, right? And they are role model, and that's the only thing I expect there. So.
Yeah. Cool. So we move on then to Dividend Waves question. And he asked, going on the second frantic week of earnings so far, which have stuck out the most for you?
Yeah, Microsoft. And you heard me today. I was almost speechless about those results. And negatively, I did expect a little bit more. I say it from I guess from Apple. Yeah, from what I just saw, I expected a bit more from Apple. I would have thought that while the countries opened up during the summer, that more people, I don't know, would also quickly buy some iPhones before the new iPhone comes out and such. I don't really know how the nature of those iPhone sales go. I would have just expected a little bit more of an Apple. Yeah.
Yeah. Cool. And then we have two questions from Phil this week. And the first one is, given the choice of any business lady or man or famous investor in the world, who would you want as a dinner guest?
What is it? Katie Woods from ARK Investments.
Yeah.
I would love to have her as at dinner. I mean, I think a conversation with her would be so great. I mean, I would even start drinking wine for her, and then listen to her talking about the future of AI and I don't know, gene editing, and I think I will be mind blown if I hear her talking. I would just put really silent music on, and then I just want to. I would be just quiet and just listen to her talking.
Good
How
choice.
about you?
I don't. Has to be the big man, doesn't it? Has to be Warren Buffett. You'd have to sit down with him for lunch or dinner and just let him speak and put all these years of experience onto me. It has to be up there. Yeah, that's
Costs a lot of money to have a lunch with him.
yeah. And I know there was this one guy in the crypto world, and I know you're not too
Exactly.
familiar. Justin Sun. I don't know if you heard, but I mean, he was the inventor or co-founder of I can't remember. It's called TRX or something. I think it's called. And he paid to have lunch with Warren Buffett, and it cost a pretty penny, I believe. So, and then Phil actually had a second question, and this is: what do you prefer more, well-known brand to the public or a hidden champion in a specific sector?
Personally, a well-known brand to the public, because as a dividend investor, I would count on a well-known brand to be more of a consumer staple. Hence, my dividend safety would be higher. That's my theory.
Yeah, I'm the same. Invest in what you know, and well-known brands are is what you understand and know. So yeah, no, I'd agree.
Thanks again for all the questions, and guys, you make it much more difficult for us every week, but they are really nice because some of those are really nice thought triggering exercises. So thanks for that. Shall we go to our stock pick section for the week?
Yep.
So what is your?
So I'll start. I didn't really have a stock pick, but I just picking what I've been buying this week, and I said it on Twitter. I've been buying Microsoft. You spoke about their earnings, and look, we can all see that they were blown away, and they were quite strong. And then when I see them drop, they dropped to $204. So I just started buying a couple. I don't have many shares, but I've started to add them slowly, one or two shares here and there. I really want them to drop under 200, and then I'll put in a big order. But until then, I'll start dripping in and buying one or two shares a month and seeing how they're getting on. But that's the one I'm going to pick this week.
Cool. So I'm not having a stock pick this week because I wanted to share hopefully something more interesting for others. Because people are asking in general, what are you buying now? And I even got the question like, do I have a war chest ready again? So yes, I unlocked my war chest a little bit again. So I just placed some purchase orders. Some are a little bit more, let's say, at lower prices, let's say 10% lower than where they are today. Others are a little bit more closer by. So I bought already Danone today, averaging down, not today, yesterday, averaging down because it was again 10% lower than my last purchase price. And so I bought them this week. But now I've got a purchase order outstanding for 3M at $135. Let's see how long it takes for them to get there. Usually they fall quite quickly when there is a market crash. I've got Novartis at 65. I'm even thinking whether I shouldn't put it a little bit higher because I find it also attractive now. I just am speculating a bit on the prices still to dip over the upcoming week. And I've got a purchase order for Johnson & Johnson at 135, which is really close to the current price. And this weekend, I will do further research for some other companies that are part of my desired portfolio to also put some purchase orders in. I would like to have 6 or 7. So it's 3M, Novartis, and Johnson & Johnson that I'm hoping I will see at a certain moment in my portfolio some more shares there.
Three solid picks. I can see why you've picked them. It kind of goes back to the question: are you buying now or after the election? And you're clearly putting in the orders now. So
yeah, and then I don't know when it will be when I buy it. It will be on a dip. Yeah,
buy the dip.
exactly.
Okay, so that's it for this week. Thanks a million to everyone for listening. It's been great fun. Enjoyed all the questions. I literally only seen them just as I came on air here. I've had a bit of a rush week this week, and you can probably tell by the earnings that I wasn't as prepared as eDGI. So next week I'll be back. I have a bit more time. But thanks a million for everyone for listening, and hopefully we'll see you back here next week.